Okay, hi there guys. Can you hear me loud and clear? Before we rip into it. Alrighty. Trying to see if we're all good. Good to go. Who's in this morning? Okay, look, I'll just get started anyway. Assuming we're all good to go. So the markets overnight, big point in the US. You had a good little run up that was coming into the US session. We had it supported by the ECB last night. They came out and cut rates as expected, and then they added stimulus. Probably a bit disappointed for a few people who had factored in a bit more stimulus from the ECB, pretty much to come out and just go all guns blazing. But they didn't. But they did add in, I can't remember how many billion they're going to be buying back on a monthly basis, about 40 billion or something like that, euro on a monthly basis starting November. That's the bond markets. They'll be buying up the bonds, so supporting the monetary system, I think you'd call it. So a bit of stimulus there, which buoyed the markets. You could see that markets chopped around a bit, spiked up and spiked down. So that was at around 9 p.m, I think. So all the markets took off after that. See, it was about, this is the DAX, so the 9 p.m. they kicked off. Same with the FTSE. But in the US come out, they had CPI, which is inflationary figures. They were, what did they come out at? I can't remember the exact point. 0.3, I think, 0.03, something like that. So the expectations which they would have, inflation was to come off a bit, which it didn't. It actually came out higher than expected. So that's sort of probably thrown a bit of a spanner in the works over there, because what they'll be looking for is rate cuts. So they're all in the US trying to figure out what's going to happen with rate cuts. Problem is the economy is actually quite buoyant considering it's doing okay. So I think they're expecting a rate cut come, was it next week? I'm not sure what day it is next week, but expecting a rate cut there. But maybe not, they'll probably look at another couple by the year end, but I don't think they're going to get what they wanted because, you know, labour market's still good. Inflationary figures are actually coming out not too bad. What they'll be watching tonight is the retail sales, because I guess consumer spending makes up a major part of the economy, and that's what's sort of keeping things buoyant. It's still quite strong. Now, if retail sales figures coming out a bit weak, that might buoy the expectations for more rate rises. But I think the Fed's still looking at the same old things. They're still going to stick to their mandates, stick to looking at the labour market and, you know, employment and stuff. So we'll see how that goes. But that's a big figure. That's at 10:30 tonight. You can see the euro. So the market's popped up and then boom, straight back down again. So that's at 9 a.m, sorry. What am I talking about? So that was the pop on Trump's tweets. And he's out again this morning tweeting about a potential for I don't know what he called it, but a potential for a trade deal, which is quite funny. He seems to be going to bed doing a few tweets just to buoy the market overnight. Hopefully wake up in the morning, the Europe's stronger, we're going to end up in all-time highs. It looks potentially like, if you look at this is the, you know, sort of the key zone on the Dow. Look, it's in striking distance now to making all-time highs. I would expect it to flush out through those highs for no other reason, but the highs are so close. Yeah, it doesn't really matter what the headwinds can be. Markets tend to take out levels, wash out levels, and what it'll do is trap potentially some longs in there, and we'll have to see if it does. You can see how it's compressing here. It wants to go up. It needs to go up, and Trump's trying to support it to go up as well. And the news out has been supportive for a rally as well. It's just how extended can it get when you're talking up the whole world pretty much is going into stimulus. You don't stimulate on an expanding economy, you stimulate on a contracting. So it's, the very least, you would expect some heat to come out of this move. But all we can continue to do is trade, you know, this is the trend that's up. it pulls back, it builds a higher low, goes again. So you're just looking for those higher lows, you're looking for the pullbacks, you're looking to buy in the pullbacks, buy some good quality stocks, and then just try to ride it up. Obviously, with the market where it is, right up in these resistance zones, you've got to be more prudent, because when it turns, it could, well, I'm not saying when, it's going to turn, I expect it to really turn. It's going to turn quite savagely. I think it'll be quite hard and fast, so just be careful of that anyway. That's the S&P, same sort of scenario. We've got it trading up into all-time highs. We're not far either, so it's within striking distance there. You can see markets tend to love to do that, and you can see it way back here. That's the high, traded through the high slightly, and then started coming off just before a bit of a crash. Yields are still, on the very low side. US bond yields on the low side. But again, we spoke about that yesterday, whether or not that's just because everyone's looking to cut rates. Where do you park money? Do you park it in the safety of bonds where you know exactly what you're going to get? And on the flip side, it's exactly what you're going to pay. To park it with the Fed Reserve, for instance, when they got negative rates, it's going to cost you, and they could get more negative. So you're not sure what they're going to do in the way of stimulus. And they want to get it negative to stop banks from just holding funds at the reserve and get them to lend it to stimulate growth. But a lot of, I think, funds and everyone have been parking it in bonds, because you buy a long-term bond, you know exactly what you're going to get for the next 10 years or so. You might have to pay, but that's a cost, of safety, of managing your risk. So whether it's just that and the economy is looking to get stimulated and tick off, we'll have to wait and see. So that's... we had a little pop this morning. You can see on... Let's just go down to a 5-minute chart. We'll get it on a 5-minute chart in the Dow. You can see the pop, and that was on the back of Trump's tweet. So that came out relatively early. The market's popped, but given it back a bit. So whether or not this is buoyant for another rally up, look, I think it is, purely because no other reason, but we're going to target those highs next tonight, or maybe next few sessions. But really, I don't know how far you're off. You're probably about 100 and something points off. I think the highs are right up above 3,300. Let me just have a quick look. So the highs are up sort of towards the, what are we saying, 400, 27.4. So it's only 200 points away. I mean, they can do that in one night. A couple of good figures, bang, off she goes. A couple of good tweets. A couple of good tweets, off we go. So yeah, we'll see how that goes. Let's just see where the ASX is open. It's popped up. You just washed out. This is a SPY. We've just washed out this high. Probably, again, on the back of the buoyancy. Now, it was interesting to see... Sorry, that was the buoyancy from the tweets. Now, this is the tweet. Prior to the open of our market and Asia, it was well timed. Aftermarket in the US, when the aftermarket is very thin, that market popped up. So we were talking about this yesterday. It popped up, took out the highs, and then rolled over. So that was quite unexpected, that kind of a pullback. And I think that's caught a lot of people off guard yesterday. And especially, you can see the way it's set up. And this is why you've got to be, you really got to, you've got to know exactly where your risk is, not just intraday, but on a daily basis as well. So the more likelihood when things are pushing higher, no matter where we are in the cycle, you don't know, but the higher it goes, it also increases the likelihood for a pullback, because everything works. You all know about the Dow theory. The Dow theory, higher highs, higher lows for a trend up, lower highs, lower lows for a trend down, and things will do that, pretty much guaranteed. You don't know how high they're going to go before they pull back. But it's pure psychology. The psychology in the move, when you get those moves up, it doesn't matter what the fundamentals are. It doesn't matter the positivity in the market. People want to take profits, and that's why you get the market turning. It runs out of buyers, it runs out of fuel, and has to pull back to build up the fuel again. Then goes again. And that's the same thing over and over again. So what it looks like on the open, it's gapped up on the open. You're going to get that. The market knows, and the pros will know, that there's going to be some sort of positivity because of the gap up, because of what's happening on the overnight markets in the Dow and this, that, and the other. It knows it's going to be positive, and it sets it up. Like it set it up, it flushed out the highs from the open by a few points and then rolled over. And that was a massive, you can just see a massive gap and trap. Gapped up, trapped them, washed them back out. Okay, does that make sense? So that was quite interesting to see that. I mean, in all honesty, I got chipped around yesterday when I was trading this on the open. Went long a couple of times, stopped out a couple of times. So I just got chopped around, not a massive loss, but I missed this entry. I actually was watching that entry for a buy off this high low, not knowing if it's going to go all the way back up. I was looking for it to power through that high. I think I took something on that, but not a lot before it jabbed me out. And then I actually had a short on here, and for some stupid reason I had it too tight, got stopped out just before the dive. So for me, yesterday, that trading, that session there was just a bit of a bummer, considering that I was short for this move, but just never got any of it. Took a 3-point loss or something stupid like that. So I was wary that, obviously with this move up, you're wary with the strength. It's a lot harder to short into a market that's biased up, if that makes sense. So when it's biased up, you've got to be careful, and that's what my mentality was, just to be a bit careful, be on the safe side, have a tight stop, chipped out, and away we go. Got on the right side, but just couldn't take advantage of it. So that was unfortunate. We'll see how it plays out tonight or today. We just have to let the market really play out to see which way it wants to go. We're just opening on the ASX, so we're expecting really about a 20-point open. It's up 10 at the moment. If we just go, this is the daily action. So the daily action from yesterday, which is really a big washout. So be wary that we haven't just washed out those highs at say 66.60. We're above that now, but it doesn't mean anything if this market pops up, does the same thing as yesterday, comes back down, finishes below there into the close, then I'd be a bit more concerned that we're going to get a bit of a pullback. We are stretched, so we're extended on the daily. Doesn't mean you can't keep going higher, but what it is a time to be a bit more careful. So basically the way I use these sorts of the stochastics is when it's oversold, overbought, I'm more concerned to go on a short down here, and I'm more concerned to go long up here. I would ideally want to go long. This is an uptrend, go long in these sorts of zones. Go long in here, go long in here. When you know it's pulled back and you're looking for entry, So you're going from contraction into expansion. Whereas when you're looking to go long up here, it gets riskier, a lot more risky. And you look at last time we were overbought, we're right up here. We just made the all-time highs on the ASX. So when it pulls back, even though we have come up, I think the market's going to be tentative up here. If you just look at the 30-minute chart, the 30-minute chart looks primed to go. It could easily make a lower high here and roll over. So just we'll watch how it goes through the rest of the day. I think like I said, we're expected 25 points. I think 25 points up on the open on the ASX. We'll see if actually that plays out and we get a bit more positivity from those Trump tweets. Anyways, guys, good luck today. Have a good weekend. Enjoy yourself. And we'll see you again on Monday. That's all. See you guys. Bye.